Hi, my name's Marc from Wharf Financial. Thanks for tuning into the Wharf Academy. I'm here today with Daryl Norkett from LendWell. How are you, Daryl?
Yeah, very good. Thanks for the invite, Mark. Pleasure to be
No,
on.
no problem at all. Daryl and I used to work together back at Shawbrook, and we spent many a day locked in a basement in Brentwood, chewing the fat over HMOs, property investment, property finance, all things property. So, Daryl, would you like to tell everybody about your background, what you've done, where you've been, and where you fit in now?
Yeah, sure. So I started my career after uni, accidentally landed at Barclays, essentially. Got called by a recruitment agent one day, didn't know what I wanted to do. Thought, oh, Barclays, that sounds pretty good. Went for the job interview, got it, and started working with small businesses generally. So trading business deals. Made a bit of a name for myself there, doing kind of unsecured loans for startup businesses, which I quite enjoyed doing. Had a great time. Enjoyed it quite a lot, and then fast forward sort of 6 or 7 years later, after doing a few different roles at Barclays, working with bigger businesses essentially, I joined a bank called Shawbrook, which is obviously where we met. So at the time, Shawbrook was kind of an up and coming challenger bank. It was already kind of going and had a lot of ambition to grow. So I looked after East of England and London at Shawbrook, and met lots of great brokers, met lots of great clients, and it was an opportunity for me to really engross myself in the property industry, and I've never looked back from there. Did a couple of jobs at Shawbrook. So as I said, looked after East of England and then London, and then I progressed and did a job called Head of Products and Markets, which is a more internal job, but just looking at the different loan products we had. Which bits of the market should we go into? So should we be doing more HMOs? Should we be doing more commercial? Is the risk reward right? Are there niches that we can go into that other people can't get their heads around? That kind of thing. And I met some great people along the way, yourself being one of them. One of the others was a chap called Stephen Johnson, who obviously Stephen. He was our deputy CEO at Shawbrook for a long time, was part of the founding team of the bank. And Stephen decided to leave for various reasons in 2018, and then came back to a few of us a couple of years later with the idea of setting up a new lender, which is where LendWell comes in, and LendWell is where I am now. So we are a small boutique specialist property finance lender who are deliberately not a bank. So our business model is to be more flexible, kind of more pragmatic, a little bit more dynamic. So we don't have the same levels of policies and guidelines and committees and approval levels and all the rest of it. We're very much focused on, do we think we can work with this client? Does this project looks like it makes sense? And if it does, then we crack on and we do it. And LendWell is a business of two halves. So one half of the business is the former, or part of the former, Shawbrook management team around Stephen, and the other half of the business is a family office who provides our funding. So all of our capital is private money, which again is great for us because it just means that there's no rules as such. It's just about deals that make sense and we can make work for us and make work for the client. And going for a couple of years now, and we broke for 100 million of completions last year, which we were very pleased with. And it's a real mix of stuff from bridging finance, refurbishment and development deals.
Good. Well, that is a comprehensive background. And looking back at your time as head of products at Shawbrook, that position, you obviously got to see trends and a lot of data that Shawbrook produced. I did an Instagram post yesterday saying, don't follow trends. Obviously, you needed to follow trends because you're, pivoting a bank and doing things the right way. What my point yesterday was, don't follow trends because everybody's doing it. You won't make as much money. I was trying to say, you need to find a niche. You need to be able to go against the curve and make your money that way. I presume LendWell's more like that because you're a lot more flexible.
Well, it depends what you do with the trends. So for me, one of the reasons for trying to work out what a trend is to figure out whether there's anything outside of that you can do that would provide additional opportunity for you. So even at Shawbrook, the mindset there, it's a big corporate institution that's, super successful in its own right, but it's not as big as a high street bank, like a Barclays or a Lloyds or someone. So even looking at trends within challenger banks, you're still ultimately operating in the niches. And then at LendWell, we're kind of operating in the niches again. So one of the big things for me that kind of brings that to life is first-time developers. So, back in the banking days, we wouldn't, a first-time developer deal wouldn't get past the front door ultimately. Kind of every bit of guidance and policy was written around seasoned developers with a track record. What we found at LendWell, kind of stepping back from that and thinking a bit more about the person that's in front of you, is that actually when you've got someone who's thought a project out, who's well prepared, who's planned for it, and essentially done their homework, to be honest, and has got a deal that stacks up on the numbers, those people are just as capable, sometimes more capable, than delivering a scheme than someone else who happens to have done one before, because who knows if the one they've done before was run well or run badly or whatever. And that's really worked for us. And we've found lots of successful deals, and there's no difference in how those loans have performed compared to the experienced guys.
That's very interesting. We get a lot of first-time developers come to us, especially on social media, and saying, can we get a loan as a first-time developer? And my advice to them is, well, yes, you can, but why don't you try doing a refurb first and see if you're able to do it? Because, you know, even though I've I sit here and you can see plastered walls and decorating behind me. If I turned my video to the right here, you'll see that there's a building site next to me, which is part of the renovation of my house, and things go wrong. And if I was doing a ground up development of 8 houses or whatever it may be, that magnifies everything. It blows it up. So you've got many more problems that you have to deal with. Starting with a refurb, in my opinion, is a good way to test the waters. And if you think, at the end of the day, if a refurb goes wrong, you're always still left with that single unit asset that can still be a house or whatever it may be. Would you tend to agree with that?
I think it depends on what someone's sort of career journey has been so far. So not all first-time developers are made equal. So some people might have done 10, 20 years as a site manager or a construction manager for Barratt Homes, or one of the national house builders. Now, clearly, someone who's been involved with large-scale property development to that extent is probably not going to want to step in and do a refurb deal, because for them it's just not exciting. It's too basic. Other people might be coming in from property completely cold and really not know where to start. And if you're in that position, then keeping everything simple and trying to kind of build the foundations with a simpler refurb deal makes a lot of sense. Other people have got an opportunistic thing that comes up in life where it just makes sense for them to pursue a development opportunity that's landed on their lap. So perhaps you own some land that you've owned historically and you've managed to get planning consent on it, and you can put that land in at kind of no cost, and you're just borrowing build costs and managing the build. You might feel more secure from that perspective because you haven't got the pressure of putting lots of capital into a land purchase to start off with. Other deals we've done where people have just been very, very successful in other businesses. So you might have had an insurance business or a manufacturing business or whatever it might be, sold that business for a lot of money, and then had a large pot of capital to inject into a development. So I think it's no one size fits all. It very much depends on the person, what their career experience has brought to the table for them, and what scale of project they're ready to manage ultimately.
Yeah. So what can new developers do to prepare themselves to get into the development world?
Yes, I think it's about knowledge and money ultimately. So I think with knowledge, it's about engrossing yourself in the property market, really trying to understand how it works, how the legal side works to an extent and what can trip you up, how planning works, and just the day-to-day stuff around, what a good builder looks like, how to do some basic due diligence on a builder to figure out if someone, is as good as they appear to be. And kind of just learn the building blocks of what's required to put a development deal together. And probably the best way of doing that is going to property networking events and meeting other people who've already done it and talking to them. And people are amazingly happy to share their experience, their contacts, their knowledge of others. It's quite a welcoming industry in that way. And then the second thing is money, because ultimately these projects do cost considerable amounts of money to deliver. And you need that financial backing to be able to cope with the uncertainties and the challenges that come out during a project. So you don't want to be in a position where, any variation to the contract or anything that crops up on site, and that could even be in a refurb when you start stripping away the ceilings and the walls and you find actually you need to replace a load of joists or whatever it might be. You need to have that financial liquidity around you to kind of deal with these things as they come up, rather than be in a position where everything that goes wrong is going to put loads and loads of pressure on you. So I think it comes down to knowledge and money ultimately.
Okay, so that money side of it, the securing of the finance and getting a loan in place, how would you best go about that? What would you do?
So I think there's so many short-term property finance lenders out there that will do bridging, do refurbishments, and do developments. Now, obviously, you should come to LendWell for everything that you need in that space. But I would say speak to a broker. You know, people like yourself, Mark, you've been in this industry for a long time. Part of your job is working with the lenders as much as it's working with the client. So you know who's out there, you know who's got appetite at the moment, you know through experience who's actually delivering on what they say they can do and who's not. And then you can match that particular client up with a lender that you know is going to be receptive to their particular circumstances and what they're trying to do. So yeah, I definitely think in this market, you need a broker to help navigate it. I'd hate to put a number on how many lenders there are out there, but it's no doubt in the hundreds.
There's
so
a
it's
lot.
important to come in
There's
cold.
a lot. And there's a new one every day. We get emailed, and it's usually on LinkedIn where we get a message. We're going to do bridging finance cheaper, quicker than everybody else. And you're thinking, I've never seen you in the industry before. How the hell are you going to do that? Where's your money coming from? And looking at things like the funding in the background and the default rates that lenders are going to charge, that's something that a lot of people don't consider. So there's a lot of things a broker can add value to when you're looking at a transaction. But I suppose touching on default rates then, are there many times projects go wrong that you've seen?
So touch wood for us, for our journey, no, not really. So far, we haven't had any. We've had lots of projects that have had challenges. So if I think back to some of the larger kind of heavy refurb deals we were doing sort of start of last year, that was probably a bad time to be starting a project, because you would have done all your numbers and all your due diligence in 2020. And then it was kind of the end of 2020, the start of 2021, that the materials inflation started to really kick in. So you planned it all around one set of costs, and actually you're finding that as you get into it, there's another set of costs. Now, if you're doing a very large development with a big contractor with a strong balance sheet and you've got a fixed price contract, quite a lot of those scenarios, the developers were okay because the contractors were strong enough to be able to wear it. But if you were doing a smaller scale refurb or conversion, then it's more typical that you'd be using a local builder, and they haven't got the balance sheets to be able to wear any of this. So ultimately, all those costs were passed back to the developer. So that was tricky for people. But I mean, even for us, we didn't have anything that couldn't be solved. There was no problems that come up on any deals that there wasn't a solution to. And there's not been anything so far that people haven't managed to get to the end and exit on. Obviously, projects get delayed quite a lot. So we do have loans that, you know, you expect to be repaid by a certain date and they're not for whatever reason. But on every instance we've had that, the properties are finished. So it's usually delays with either getting to the finish or with exiting. So that might be sales taking longer than you expect to come through, because they usually do. Just the mortgage process and everything is slower than people think. Or just refinance is taking time to go through because the lenders are typically quite busy at the moment.
Yeah, definitely the refinances, they are taking longer at the moment. And it doesn't seem to be the solicitors or the valuers taking longer. It's the lenders that I've seen taking it's a few extra days to look at things. So yeah, it's something definitely worth noting. But does it get easier with experience, would you say, or is it always the same?
I think it does get easier with experience, but I think it takes a long time to have enough experience that you've seen every problem that can happen, because these projects are so different. So whether you're buying a bit of land, building some houses, and all the challenges you might have in the ground and everything else that goes with that. The next time you might be doing a conversion of an office to some flats, and that has a different set of challenges. Some locations have different challenges to others. So for example, the soil can be different. The planning expectations can be different around how many conditions there are and what you need to do. At the moment, there's more and more planning conditions coming in around energy efficiency as everyone's pushing towards greener homes. That creates a new set of problems that even the most seasoned developer from yesterday didn't have, because it wasn't an issue. It wasn't a topic. So the market is forever moving. It's forever changing. And what's required of the developer to meet building regs, to meet planning, and to meet what people want as their end products is changing all the time as well. So I think experience gives you the tools to kind of read across to other similar problems that you might have had before. It gives you the contacts, those people you can call upon when you've got a challenge that you're really trying to solve. But I don't think you ever really get to the point where you can say, everything. So we're all still learning.
Excellent. Yeah, well, it's encouraging that LendWell are supporting first-time developers. And I know you guys have done your own developments in the background. So it's good that you understand the issues and the questions that customers may have. So we'll wrap it up there, Daryl, but thank you very much for coming on. Really appreciate it. If people want to get hold of you, what's the best way?
Yes, you can find me on LinkedIn, Daryl Norkett, or you can grab me on email, daryl.norkett@lenwell.co.uk. Or of course, ring Marc. And if you've got any deals, we'll be delighted to both speak to you about them.
Excellent. Thanks for that little plug there, Daryl. So thank you for tuning in. You've been listening to the Wharf Academy. You can get us on social media at Wharf Financials, or you can email us at info@wharffinancial.co.uk. Please like and subscribe. Thank you very much.